Get the little applause there. All right, well, today we want to continue our Idea of the Month partnership with Seeking Alpha, and joining us now is Seeking Alpha author Fred McClymans. Fred, it's good to see you, as always, following a range of stories this morning here, one being Salesforce and the customer relationship management platform earlier this week that did launch a $50 million fund to invest in AI startups. Global financing for AI startups we've seen is projected to surpass almost $11 billion this year. That's according to Reuters, and that is nearly double numbers from 2016. So a commitment here by Salesforce. We had one earlier from Intel as well this week on Monday. What does this say about the space?
Well, I think if you look at the overall market appetite for AI, it's pretty much the thing today. Most people recognize that the future of digital, whether you're an enterprise selling to another business, whether you're selling to the end consumer, the future of digital is really about understanding the customer. Not just what they're going to do down the road, but what they're going to do right now. And that type of predictive analytics capability, the ability to kind of engage and interact with the customer, the ability to learn from the customer's data, that's really what's driving a lot of the development behind AI today. This move by Salesforce, a $50 million fund, while not a big fund, I think would have actually a fairly significant impact and really dovetails nicely with their Einstein solution that they opened up last year.
Well, and then the big announcement on Monday was Intel's announcement, a $1 billion pledge that it is going to make, and you take $1 billion out of this $11 billion total spend expected for this year, and you got to think that Intel's a pretty big player in this space as well.
Well, realistically, who isn't investing in AI in this space right now? I mean, you go down the list, whether it's Facebook, Google, Amazon, Salesforce, Oracle, Intel, everybody is moving into this space. This really is sort of the next evolutionary step of digital technology and of business operations for most of the major companies out there today. So, these large players, they're putting, very strategic, very well thought out investment monies in. And I wouldn't consider, Intel and Salesforce to be competitors and to be judged based on the amount of money they're putting in here. They're each approaching it from a slightly different perspective, but that is the big force. And eventually, in fact, probably not that long from now, a lot of this technology, the fruits of this, will really start to work its way down, into the enterprise and into the SMB marketplace as well. There are a lot of really tight companies out there that are doing some really innovative development in AI and predictive analytics, in the cognitive space and machine learning. So it's only going to get better at this point.
Wouldn't you say, though, that $50 million from Salesforce or Intel is a relatively de minimis investment, more of a token investment in this area? I know that sort of AI is an increasingly important part of the conversation in the story, but I'm just not sure what a $50 million investment vehicle says other than a public pronouncement that we're going to be in AI. Kind of reminds me of like Apple's iFund or whatever it is. It's a lot more marketing than it is translatable into results.
Well, that's a good point, but I've got to think that if Salesforce is really looking to put something out there to say, hey, look, we're in this marketplace, we're going to be aggressive, I've got to think that they would have put more than $50 million behind it. So if you take a step back and look at what does that $50 million really buy Salesforce, they're not going to be putting all of that into one company. I'm guessing that they're probably going to put money in, in $1 to $3 million, portions, if that. Their goal isn't to lead investments and not to, it's not to start up new companies. It's to tag along, established, well-funded VCs and to get access to that company, bring that company closer into the Salesforce fold, extend their ecosystem into a new area of development, and really leverage a lot of the independent innovation that's taking place out there. Let's face it, $50 million, not going to buy a lot, but when you think about buying board access and strategic partnership access to, maybe 20, emerging AI firms out there, that's not that bad an opportunity at all.
Fred, let's quickly talk about Amazon. I don't know what this company is not invested in or doesn't have its eye on these days, from everything from content to space to food, you name it. But anyway, here, when it comes to retail specifically, right, partnering with Kohl's, expected to open another massive headquarters. also too, in addition to the Seattle location, also too now buying Whole Foods, that merger actually complete. And so we've seen the stock retreat a bit from these record highs, but when it comes to Amazon's space in the retail market, what do you think?
Well, I think, long term, at some point, Amazon will stumble, decades perhaps down the road, and their epitaph will simply be disruptor, not disruptee. And what they're doing in all of the markets that you mentioned is they're taking a very aggressive, disruptive stance, leveraging their internal infrastructure and their resources to expand just about everywhere. So, with this move into Kohl's, I think it's important to recognize that, Kohl's is not a Whole Foods. Kohl's is not a Walmart. They're not even a Toys R Us that just filed, for bankruptcy protection this week. Kohl's, they have, about 1,100 outlets around the country. Amazon is going to be using Kohl's to accept returns from equipment or items that have been purchased online through Amazon. So this really is more about extending the relationship with Kohl's, and we know that Amazon is big into fashion, big into clothing, so there's potentially a connection there down the line. But it's really about expanding that physical footprint, having more points of presence where they can engage, just like with Whole Foods in terms of having boxes, the lockers where you can pick up your goods. I would expect something similar to come with Kohl's down the road. But for now, it's a good opportunity for Amazon. There's almost zero risk. In fact, if anything, there's more risk to Kohl's. Kohl's betting on this, hoping that they get a bump in in-store traffic, which they do need. I mean, they're not in terrible financial shape, but they are suffering along with most other big box retailers out there.
All right. Fred, we're going to have to leave it there, but Fred McClymonds, author at Seeking Alpha, thanks as always.
Thank you, guys.